This week was crazy as every stock trading, TikToking millennial in their emotional support guinea pig has been glued to the melt up in heavy shorted stocks like GameStop and the meltdown in the hedge funds who heavily shorted these stocks. Now, no offense to the millennials here on this channel because we're investors, not traders, right? However, there have been significant impacts under the covers of the rest of the financial markets that few have noticed. But we have. The FANG stocks and the ETFs have seen liquidations to meet margin calls from the hedgies who have been trying to hold their short positions on these formerly tiny video game retailers and the like. The outsized influence has caused an altered composition of the market this week. For now, this seems to be contained, but it will soon become very political, and then who knows? But one thing for sure, the politicians will come out in droves to support the little guy, but they're only looking to get Wall Street to grease their skids so we can get back to the new normal. And what is the new normal? It's the Fed waving trillions around like a dollar bill in a strip club. So, after all, everything is still awesome. So, let's take a look. But first, as the fear and greed index plunged toward fear, small cap stocks surged in January as the Dow and the S&P 500 were flat, and the Nasdaq managed only modest gains. But as you can see here from this chart, the top 10 most heavily shorted stocks in the Russell 3000 exploded, and that's what I was talking about earlier. And this is in part why the Russell 2000 has been doing quite well. So now let's go to the charts. And today we're going to take a look at one chart, and it's the 6-month daily on the spiders, the SPY, and the close on Friday was 370.07. Now, a couple of things to look at here in the price chart. First of all, are these lows back here and back here. They both went below the 20 and the 50 EMA, and that's what I'm going to be looking for here. Now, as well, we were looking at this channel line with this bottom support level and this top line level here. Not a straight line, but you get the idea. So we've been within this channel as we've moved on up, bouncing up against the top and reflecting off the bottom here. And last update, I wanted you to watch for either a breakout or a breakdown. And it seems like right now we're having a breakdown. I don't think it's going to be too severe. We are going to go below that 50 EMA into the next week or two because I think there's some further weakness. Now let's go down here into the volume, not really all that unusual, and into the MAC. I think the fast line here and the slow line, that separation means that we probably have some acceleration in the fast line as it moves on down here. But we're still above that zero line, which means we still have some strength. Now, again, back here and here, that's kind of what I would look for, is a move maybe down to the zero line. Hopefully we can turn around there because right now we have that slightward uptrend, but who knows, we might go below that. And even if we do, it's not really all that significant. Into the histogram, you can see the elevation wasn't really that high, so I don't think there's a lot of stock market gravity that's going to pull us down too far. Once again, look at these levels here and here to see how far perhaps it will go. That's my expectation, at least at this point in time. I don't see much else behind this move. Again, same setup there in the price rate of change, the relative strength, as well as the stochastics and the Williams. The Williams is indicating we have further downside, further weakness, and I would expect that in the next week or two. Back up to the price chart, one last check. Again, we don't really have too much behind this downtrend. I think this correction is overdue. It's about time that we had a pullback, and I think that's all it's going to be. So I have a lot of money on the sidelines, and I'm going to be looking for some bargains. So please, you too, if you've got cash, look for bargains. Take your time to adjust your portfolio, but we do have some serious problems coming up, so be patient and prudent. And for today, that's ChewDog Charts. Thank you.